Hi everyone, welcome back to the US CPA classes. In this particular class of regulation exam, I'll be walking you through in detail federal taxation of property transaction, and specifically the topic we are going to cover is cost recovery, that is your depreciation, depletion and impairment. In addition to that, we'll be covering IRC section 168. So let's dive into to understand more in detail about cost recovery and section 168. Cost recovery include depreciation, depletion and amortization, all the three things, right? So depreciation is generally on plant machinery assets, which are tangible assets. Depletion is on natural resources and amortization is for intangible property, right? These are the terminology used, we all know, right? So now first thing is depreciation. Section 168. A deduction is allowed for wear, tear, exhaustion and normal obsolescence of property held for production of income or the property used in trade or business. So depreciation is used for normal wear, tear and you can say routine obsolescence of any particular asset which is used for production or the normal trade or business purpose. That's the definition of depreciation. No depreciation is allowable on the following: personal property not used in trade or business. That means personal use property. For that, you cannot charge depreciation. Clear? We discussed like what is personal use property, like your car, your personal mobile, your laptop, your home, right? On that, you cannot claim depreciation as your business expense. But if you are using the movable property, which is also called personal property, right? On that, depreciation is allowed. Second is inventory. On inventory, there is no depreciation. And the third one is land. Land is also considered as non-depreciable asset, right? So far, so good.
Yes, sir.
Depreciation is computed using a modified accelerated cost recovery system. So in short form, we call it MECAR. So this is kind of most preferred method used in United States of America for depreciation, right? So in India, you all have studied two methods of depreciation. What are those?
SLM and WDV.
Yeah, so first you need to unlearn that and then let's learn the new concept which is being applicable in United States of America. This is for tax purpose only, right? This method are not for the books purpose, right? So if you remember like deferred tax, you know deferred tax,
Yes.
right? So deferred tax asset or deferred tax liability is generally been generated on temporary differences between book and taxes, right? So this create a temporary difference in the depreciation expense and result into deferred tax asset or deferred tax liability as the case may be, right?
So I have a quick question, sir.
Yes,
For
please.
example, there is any tech company who are spending capital expenditure to create one software,
Mhm.
right? So, and
Mhm.
and it is possible that maybe after 5 years that will be outdated or maybe a new technology will be there. But
Mhm.
then for that particular time period, they need that software,
Mhm.
right? So
Mhm.
how they going to treat? They're going to amortize it or they're going to depreciate it, that capital
Yeah,
expenditure?
yeah. Very good and very practical question here. There are three things, like when we come to the amortization, we'll be discussing again for sure because that is relating absolutely to your question. So, in the first phase, when you are doing research, any expenditure on research you are making, that will be considered as expense that you should not be capitalizing. But
Okay.
when you have done the research part and your prototype is ready, and after that, for the commercial production, you wanted to do the development phase. So for the development phase, expenditures are allowed to capitalize. So that is one thing,
Yeah.
right? Second thing is the total investment on development you have made, you can capitalize as a software, which is your
Right.
intangible asset, right? Intangible assets every year end is subject to two things. One is amortization and second is impairment,
Okay.
right? So when you have developed the software at that point of time, you know how much maybe tentative life of the software. So at that point of time, if you have assumed the life is 10 years, let's assume, and the
Right.
total expense, let's assume $1 million you have made. So every year, let's assume you are using straight line method of depreciation, $100,000 depreciation you are charging.
Okay.
But at every year end, it is mandatory to do impairment assessment. It's mandatory for
Okay.
intangible asset, right? So after 3 years, you realize that my software maybe long last for 2 more years, not for remaining 7 years, right?
Right.
So at that point of time, first, if it is required to do the impairment, then you book the impairment loss. Or
Okay.
what you can do, the remaining balance you can amortize in the remaining 2 years. So for that, like critical assessment as a management, we need to do, and we need to
Right.
create a white paper justifying our position.
Got it, sir. Yeah.
But we'll be discussing that in amortization topic.
Okay. Yeah. Sure.
Right?
Thanks.
So now first we are discussing depreciation. So for depreciation is on tangible assets, and tangible assets are of two category which we have discussed earlier. One is your real property and second is personal property, right? Hope you remember what is real property.
Yes, sir.
Land
Sir.
or anything permanently attached to land or growing over the land. And personal property is all movable property,
Movable.
right? Which is used for trade and business purpose. So the modified accelerated cost recovery system, in short, we'll be discussing as a MECAR. And this is the most preferred method used for calculation of depreciation, right? So what all thing you should be considering? First is the full cost is written off over the prescribed recovery period, right? In India, when you calculate the depreciation, what you do? You reduce the salvage value. Yes or no?
Yes, sir.
Yes, sir.
Right? So in India, you're saying like total cost of assets minus salvage value. So that is the amount you will depreciate, right? It depends on the method you are choosing, straight line or WDV. But whereas in US for tax purpose, MECAR depreciate 100% value of the asset. There is no concept of salvage value. Clear?
Right. So what
Second
if
is,
there is a cost in salvage? I mean,
mhm,
in
that will
US
be
I've seen.
income. That will be
Yeah.
income. That will be income.
No, no. In US I've seen that they pay to dump those stuff if any kind of machinery is there and they want to remove it. So there will be a
Mhm.
cost involved to it, right? They cannot simply dump like in India.
Yeah, no, there are two things for that. One is, like the regulatory requirement that you need to ensure those things, those plant machinery, or maybe like, for example, oil and gas industry. So you need to rig the well, which you like from where you extract the oil, right? So if those are mandatory requirement, then it has to be included in the cost and need to be depreciated accordingly. But if it is not mandatory, then it may be your expense in the year of, like demolition.
Okay. Yeah.
Sir, I have a question. Sir, in any case, where there is a deferred cost which needs to be incurred later on while dismantling or restoring the things, those are considered while recording the asset in first place. I think
Yeah, yeah, that is what I'm
so.
saying. When it is being mandatory that you need to do such
Hmm.
demolition or restore to the original position, so at that point of time you have to capitalize. But when it is not mandatory, so then I don't think like like it required to be capitalized at that point of time. And I have not seen any practical experience for that. Like for oil and gas industry, if you are extracting oil, then as per regulation, it is mandatory that you need to fix the rig after extraction of oil, right? In that case of scenario, rig cost you need to be identified in advance and capitalize that and then depreciate over the period of time. Same way, like for any particular place, like let's assume you have installed any plant and machinery, and after 10 year, 15 year, it is mandatory by law that you need to demolish this particular area, this particular infrastructure, and give it back to the government in the same way they have provided you, right? It is possible that you might have taken something on a 15-year, 20-year, 30-year lease from the government, and after that you need to restore the original position and give it back to government. In that case of scenario, yes, it will capitalize.
Correct, sir.
Next is life of tangible property used in trade or business or held for production of income is set out by classes. So same way, if you remember in India before the Companies Act 2013, right, there was like specific schedule. I think was schedule 6. I'm not sure have you guys have ever experienced that or not. Like I remember my internship day or like my initial CA days when I was used to do practice, we used to follow the rate which is being defined as a minimum depreciable rate for the respective category of asset, right? Same way in India, if you see as per Income Tax Act 1961, there are also depreciation rate which is being defined, right? So here also what they are saying, the life of tangible asset for respective category of asset is being defined in the income tax law. So you need to follow that unless and until you feel it has to be reduced or it has to be increased. But for that, you must have a justified reason to prove to the IRS officer in case of IRS inquiry. Make sense? So those groups could be like building, furniture, computers, machinery and equipment, automobile, etc. for general depreciation system and alternative or for an alternative depreciation system. So that we'll be discussing we'll be discussing, or you can say in your notes, those are frequently tested in the examination. For that we have already provided the details in notes. So don't worry, we'll be coming to that. But what you need to keep in mind, the life of the asset is being defined by IRS. For income tax depreciation purpose, most of the people are using that only just to avoid any, you can say, demand or penalty or any inquiry from IRS. Unless and until you have very solid reason to deviate, then only you will deviate. Make sense?
Sir, one question, sir. Depending on the size of the organization, they
Hmm.
sometimes decide whether this expense of this much dollar they
Hmm.
will consider as an asset or
Hmm.
they will consider as an their operation expenses.
Hmm. Hmm.
So
Hmm.
in that case,
Hmm.
is there any clause from income tax IRS side that no, you have to treat this expense as an asset, or you
Hmm.
can choose not to treat an asset?
Yeah, no, very good and practical question. I would say, like company can make any policy and that policy can be followed for their books purposes because that comes as an notes to accounts and they will be mentioning in the notes to account for depreciation or fixed assets capitalization policy, right? But whereas for tax purpose, it is clearly mentioned any asset for which you can see the expected use will be more than 12 months that you should capitalize. So it may be possible that as per the you can say the company policy or for accounting method, some of the item they are expensing off, but those items may require to be capitalized as per IRC. Internal Revenue Code. It may be possible. Make sense?
I've seen some companies following threshold system as well, you know.
Yes,
So
yes, yes. Yes, I have also audited company like Amazon, HP, Intel, Facebook, right? So for accounting policy, they can make it, right? Because that is permissible to them. But for tax purpose, if the asset is expected to be used more than 12 months, it has to be capitalized for tax purposes. And that will result into deferred tax asset or deferred tax liability as the case may be.
got it.
Hmm. Next is 𝐸𝐴R depreciation, not used for intangible property because those are subject to.
Sorry, sir,
Hmm,
disturbing you again.
hmm,
This document that you are showing us is in a
hmm.
Word format. Can you please make like point number 5 or point number 1 that any capital asset or capital expense going to be utilized for more than 12 months, then as per tax, it should be considered an asset.
Hmm. I'll add here in capital asset definition, which we have discussed earlier. So, 1 second.
I think it went down. It was there, 12 months mentioned.
I'm sure, like in here, I think also you might have mentioned capital expenditure are constant with operational expenditure, which is short-term incurred in D&D. I'm sure it will be mentioned somewhere, but if not, then here in capital asset, I'll add one line over here for you. Right? I'll see like during the break time where it is mentioned so that I can help you highlighting that. If it is not, then I can add one liner in where we have mentioned about the capital assets.
Okay, sir.
Right? So I'll do that. Yeah. This is for inherited
On page
property.
20, page 21, it is there, sir. On
Page.
page 21.
Mhm.
It is mentioning for short term and long term.
Mhm. No worries. I'll add one line. Yeah.
Holding
Holding
period.
period. So this is for short term and long term. Yeah. But
Okay.
yeah, I'll add one liner in the definition of assets itself, right? So that where it is bit more. Hmm. Yeah. Now coming to the 𝐸𝐴R depreciation. So 𝐸𝐴R depreciation is not used for intangible property because on them we will be charging amortization cost. Right? Property not depreciated in the terms of year. So there may be possibility we will be using unit of production depreciation method. So any idea what is unit of production method of depreciation? Any guess you can make? Hmm?
Sir, it depends on the how much we will be producing from the particular machinery over the life of it,
Mm-hmm.
and proportionately charging as per the actual production which we must have
Yes.
produced during the year.
Yeah, yeah. So like nowadays there are a lot of machinery which come up with the capacity, like how much production that machinery can do, and after that it may be like required the overhauling, repair, capital repair, or it can be exchanged for some new, right? So in that case of scenario, based on actual number of production divided by total expected production, multiply by the value of share. So that is how you can calculate the depreciation. So in these two cases of scenario, 𝐸𝐴R depreciation is not allowed, right? Whereas for other real and personal property, 𝐸𝐴R depreciation is allowed. Real property are further of two categories. One is residential real property and second is non-residential real property. So residential real property is like homes, right? You can say residential complex, right? Those all comes under the residential property. commercial complex, or you can say offices, or I would say shops, all those things will comes under the non-residential property. And the life is being defined as 27.5 years for residential property, and for commercial, or I would say non-residential property, is defined as 39 years. Clear? So that life is being defined in IRC. Accordingly, you need to consider for depreciation. Another interesting topic here is for the real property. What is real property? Land or anything permanently attached to land, which is like building for fixtures, right? Or maybe centralized AC, which is being installed in the building, or centralized heating system, which is being installed in the building, or maybe like growing trees, sands, right? Those all things comes under the real property. So now the real property is mandatory under the McCar method to use mid-month convention, right? So what is mid-month convention method? That means in the month when you have purchased the real asset, in the month when you purchase the real asset for that particular month, irrespective of the date of purchase of asset or date of capitalization of asset, you will be charging depreciation for half month. That is called mid-month convention. So whether you have purchased the asset on 1st January or 31st January, you will be charging the depreciation of half month of January in the month of purchase, right? And same thing applies to the month of sale also. So whether you are selling on first day of the month or last day of the month or any day of the month, irrespective of that, in the month when you are selling, you will be charging the depreciation for half month. That is called mid-month convention. Make sense? Any doubt here?
No, sir.
No, sir.
So the real property acquisition are subject to mid-month convention, that is half month cost recovery is allowed in both the month, acquisition month and the month of disposition, means sales. Real property for trade business may alternative depreciation system to depreciate any of its non-residential real property and residential rental property and a qualified improvement property. For that, we'll be discussing in detail point number 6, if there is any alternate depreciation system which they are using. So what all things you need to keep in mind on this page is, first, what is depreciation? That we all know. Second, on what depreciation is not allowed. Personal property, inventories, lands, right? Then the depreciation methods, there are two methods. One is McCar, which is most preferred method. Second is alternative depreciation method. Second depreciation method is alternative depreciation method, right? What all things you need to be considerate when you are calculating depreciation? You need to consider full value of asset. There is no salvage value reduction. You need to consider the life of the asset as defined in IRC, right? For the real property, it is defined, if it is for the residential, 27.5 years. If it is for non-residential, like commercial building, 39 years, right? But the depreciation method we all need to use is mid-month convention method. And the mid-month convention method is half month in the month of purchase and half month in the month of sale. You'll be charging the depreciation respectively. Right? Next is personal property.
Sir, sir, I
Yes.
have one question.
Mhm.
So we are referring the month of acquisition for depreciation. So here there is no concept of put to use or the actual
Yes.
usage of
Put to use,
the.
put to use, put to use. Same.
Sir, again,
So so
just for
ho-
adding, is there any option for like in in production or under construction property, like which has not been completed in the year?
Yeah,
Can
for
we
like
charge
certified,
depreciation?
same way how in India We take certified engineer certificate for completion certificate.
Okay, sir.
Yeah, Shambhu, you had some question?
So, sir, instead of month of acquisition, we would be using the half month for the month in which it is actually put to use, right?
Yes, yes, yes.
Okay, that's
Hmm.
it. Thank you.
Right. Maybe we can take a break over here. So it's 12:20. We can take a 20-minute break and we can come back at 12:40. Then we can continue
Sure,
the
sure.
remaining. Hmm? I think
Sure.
some people are feeling drowsy. So like next is interesting topic and slightly complex. So I thought it's better to take a 20-minute break. So let's come back at 12:40 and then we can continue from here.
Okay.